Alright everyone, welcome back to the channel for another one of these quickfire updates. Today I just wanted to spend 1 or 2 minutes talking to you about the sticky price CPI. So let's dive right into this. Well, if you've been watching the channel or even if you keep up to date with my Twitter, I've been letting you know the news around the US CPI that came out today. Now, I won't dive into this today because we talked about this on Twitter and in my most recent Bitcoin video. All you really need to know is headline inflation and core inflation. The reports were much worse than anticipated. We had higher inflation in core than was forecasted, and we were supposed to have a big drop in headline inflation, and we really didn't have that big drop. So markets were anticipating a bullish rally based on bullish CPI news. Didn't happen, but outside of CPI, you know, if we can separate CPI and we can look at things in a slightly different way. Now, one of my favorite ways to do this is to look at the sticky price CPI. Now, you might be wondering what this is. The Atlanta Fed defined this quite well. Up here, you can see on the day of the CPI release, the sticky price index sorts the components of the consumer price index into either flexible or sticky. Sticky just means slow to change categories based on the frequency of their price adjustment. So, for example, let's get rid of the core sticky CPI and the sticky CPI. I'm only going to really be looking at the regular CPI for this because, as you can see, the core and the sticky are the core and the regular sticky are basically following each other to the teeth. But when we pull up the flexible CPI, you can see now we're taking into account things like the energy crisis. We're taking into account things like the rising and falling of food, which is a category which is very quick to respond to changes in monetary and fiscal policy. However, when we visualize the sticky CPI, we're taking away these things. You know, whether we're looking at sticky CPI or core sticky CPI, we're taking away, you know, the very fast moving categories such as energy and food, and we're getting a better idea of the direction of the CPI over the long term, because once again, when you look at something like sticky price CPI, we're looking at the categories which are slow reacting. So it's going to take a long period of time for these to start breaking back down to the downside, even though we've got, you know, regular headline inflation and flexible CPI. These are starting to dramatically tumble, but with things like the rising energy costs and rising cost of food, sticky CPI is likely to continue rallying up. And if you're wondering where we've moved up this month from last month the sticky CPI was coming in at 6.1% with core sticky at 6%, and it has now increased to 7.7% on an annualized basis, with core sticky CPI moving up to 7.5% annualized. So that's all I've got for you today, my friends. Like I said, just another one of these quick fire updates. I just want to share one thought with you in a quick manner. Nonetheless, if you do enjoy these quick form updates, let me know down below if you're interested in hearing future updates about the sticky CPI. If I see anything important to mention, I'll keep you updated. As of now, all I've got for you, my friends. Cowboy out. Peace.